All right. Welcome back, everyone. Ready for another deep dive?
Always ready to dive in.
Today's topic: gearing up to become a smarter investor. Making those informed decisions that help us reach our financial goals.
Absolutely. And our listeners sent over a whole list of ways to gather information, some of which, honestly, I'm curious to dig into myself. Earnings calls, technical analysis. There's a lot to unpack here.
Yeah, I know. Some of this stuff, like, where do you even start?
Well, think of it like this. Every investment decision you make, it's like a puzzle.
Okay, I like that.
Yeah, and all these tactics we're going to be talking about, they're like the tools to help you find the right pieces, understand how they all fit together, and ultimately see that complete picture.
Okay, so before we get to the specific tools, let's just lay a little foundation here. What exactly is investing? And why is gathering information so crucial?
So at its core, investing is putting your money to work with the hope that it grows over time.
Right, but it's not just like throwing money at whatever's popular.
Right. Exactly. It's about making these informed decisions, considering your goals. Like, what are you hoping to achieve with your investments? And how much risk are you comfortable taking along the way?
So how do these tactics or tools play into that, making those smart decisions, I mean?
They give you the insights you need to really evaluate potential investments, to look under the hood, so to speak. We've got 15 tactics to explore from the listeners list, and to keep things organized, we've grouped them into some key themes.
Okay, so what's the first group we're tackling?
Let's start with understanding the business.
Makes sense. So this is all about like getting to know the companies, the industries that we might want to invest in.
Exactly. And one of the most powerful tools in this group is fundamental analysis. It's like before you buy a car, you'd probably want to check out the engine,
Right,
right?
make sure it's not a lemon.
Exactly. So with fundamental analysis, you're peeking under the hood of a company by looking at their financial statements. Things like revenue, profits, debt.
So we're trying to figure out like how financially healthy a company is and I guess its potential to grow.
Exactly. And there are so many ratios and metrics you can use. For example, you might look at a company's price-to-earnings ratio, or PE ratio for short. It compares the stock price to how much profit the company is making.
Okay, so a high PE ratio, does that mean a company's doing really well?
It could. It might mean investors are optimistic about its future growth. But on the flip side, it could also signal that the stock is overvalued, meaning the price might be too high compared to its actual earnings. It's all about context.
Yeah, looking at the bigger picture. So besides crunching numbers, what else is involved in understanding the business?
Don't underestimate good old-fashioned company research. You want to look beyond those financials and really get to know the management team.
Okay, like their experience, their track record, that sort of thing.
Exactly. Have they led companies to success before? Do they seem competent? Also, dive into the company's products or services. How do they stack up against the competition?
Right, because even if a company has an amazing product, if they can't adapt, if they're not innovating, that can spell trouble. Didn't we see that with like that energy drink company, I think it was called Go Fast?
Oh yeah, go fast.
Huge for a while, and then boom, crashed and burned. They just couldn't keep up with the market.
And that's a perfect example of why this research is so crucial. And speaking of the market, don't forget industry and sector analysis. Zooming out to understand the broader trends can help you uncover some serious opportunities.
Okay, like is the industry growing or shrinking? What are the main factors driving it?
Exactly. Take renewable energy, for instance. If you're interested in investing in that sector, you better understand things like government policies and technological advancements.
So it's about connecting the dots, seeing how those big picture trends could affect the companies you're looking at.
Exactly. And another piece of the understanding the business puzzle is peer comparisons.
Okay, what's that all about?
It's comparing a company's performance and valuation to its competitors. Are they leading the pack? Are they lagging behind? This can give you a better sense of their relative strengths and weaknesses.
Okay, so we've covered the basics of understanding the business. What's up next?
Now let's shift gears and dive into decoding market signals. These tactics are about, reading the tea leaves, anticipating those potential price movements.
Sounds a little mysterious. How do we even begin to decode these market signals?
Well, one widely used approach is technical analysis. It's all about studying charts and patterns of past price movements. Like, are there trends emerging?
Okay, give us an example.
Sure. A classic pattern is the head and shoulders formation. It often signals a reversal in the price trend. Imagine you're watching a stock, and you start to see this pattern forming.
So it's like a visual clue that something might be about to change.
Exactly. Of course, no strategy is foolproof, but it's another piece of the puzzle. And then, of course, there's the constant flow of news and market updates.
Keeping up with the headlines.
Absolutely. Staying informed about economic data, geopolitical events, industry news. Like, let's say the Federal Reserve suddenly decides to hike interest rates.
Yeah, that could have a ripple effect on the entire market.
Exactly. You've got to stay ahead of the curve.
Okay, so where does historical performance analysis fit in here? Looking back to understand what might happen in the future.
You got it. Like the saying goes, history doesn't repeat itself, but it often rhymes.
I like that.
So by analyzing past performance data, whether it's for specific companies or the broader market, you might start to notice these seasonal trends, recurring patterns. For instance, some sectors, like retail, tend to perform better during certain times of the year.
Like the holiday season.
Exactly.
Okay, that makes sense. Now, what about getting information directly from the source? Is that even possible?
Absolutely. And that's where our next group of tactics comes in, direct insights. It's about proactively seeking information from the companies themselves or from experts who follow them closely.
So going straight to the horse's mouth, as they say.
Exactly. And one way to do this is by listening to earnings calls and conference presentations.
What are those exactly?
These are events where company leaders talk directly to investors and analysts about, their performance, their strategy, their outlook for the future. It's a chance to get that behind-the-scenes look.
Kind of like peeking into their playbook.
Exactly. And while they can be a bit dry at times, analyst reports can also provide valuable insights. These are professionals whose job it is to research specific companies or industries, really get into the weeds. Then they publish reports with their findings, their recommendations.
So it's almost like having a team of experts doing the research for you.
In a way, yes, they can help cut through the noise. And of course, don't forget about those government and regulatory filings.
The official stuff.
Right. These are publicly available documents that companies are required to submit. They can reveal a wealth of detailed financial information, things like their different revenue streams, expenses, debt obligations. It's all about transparency, making sure that information is out in the open.
Okay, so much to dig into. What else falls under direct insights?
Many companies also have dedicated investor relations websites and create investor presentations. These resources often explain the company's vision, their plans, their financial outlook, all in a format that's a bit easier to digest.
Got it. So we've covered a lot of ground with these more traditional sources. What about tactics that are a little outside the box?
That brings us to our final group, additional insights. This includes things like social media and investment communities.
Oh, yeah, I could see how those could be helpful.
They can be great for sharing ideas, learning from other investors' experiences, but it's so important to be careful with these online platforms.
Because not everything you read online is true.
Exactly. It's like the Wild West out there. You've got to be discerning. Do your own research. Don't just blindly follow advice or jump on the latest bandwagon.
Solid advice. What about financial publications and newsletters?
Those can be a fantastic resource. They provide analysis, investment ideas, insights from seasoned professionals. It's like having a mentor in your pocket.
I like that. Okay, we've covered a lot of ground here today. So much information. What are some of the key takeaways for our listeners who might be feeling a little overwhelmed right now?
The most important thing to remember is there's no one-size-fits-all approach. The smartest investors use a combination of tactics, tailoring their strategy to, their own goals, risk tolerance, and the types of investments they're most interested in.
So it's really about finding the tools that work best for you.
Exactly. And becoming comfortable with using them to build that well-rounded understanding of the market and the companies you're considering.
Okay, so no need to try to master every single thing all at once.
Definitely not. Remember, becoming a successful investor is a marathon, not a sprint. It's a continuous journey of learning, adapting, refining your approach.
And staying curious. To our listener out there, what information or tactic from today's deep dive really stuck with you? What first step are you going to take to put these insights into action?
Remember, knowledge is power, especially when it comes to investing.
We've given you the map. Now it's up to you to chart your course. Thanks for joining us for this deep dive. We'll see you next time.
See you then!